Inflation is usually considered to be a negative thing, but some people have been very happy with the I word because they invested in I bonds. Those are Series I bonds issued by the U.S. government, and the interest they pay is based on inflation, which has been high, so has the interest. Each May and November, the Treasury Department looks at inflation and then sets the interest rate that I bonds will pay. Well, back in May, it was a whopper, almost 10% interest. Many investors snatched up that guaranteed almost double-digit return that I bonds were giving because they thought something that good probably won't last when the interest rate is reset in November. And they were right. The rate that I bonds pay went down to just under 7% in November. But if you bought them before that change, you get that previous higher rate for the first 6 months that you own them. So Treasury tells me that during just the final week of October, they issued nearly twice as much in I bonds than the entirety of the year before. People were getting them, which means Treasury's phone lines were nuts. That was very bad for people who may have forgotten their passwords and got locked out of their accounts, and that actually happened to one woman who wanted to buy more but couldn't log in. She contacted me and said there has to be a readily accessible way to get accounts unlocked and reset. Nope, calling is the only way to reset it, and call volumes exploded. Wait times went from seconds to many hours. Now that the frenzy for the really high I bond rate has passed, Treasury says it's much easier to get through on the phone. If you're interested in I bonds, you can talk to a financial advisor, but some basics here: each person can invest $10,000 a year into them. So if you haven't done this already, you could invest up to $10,000 this month and then $10,000 again next month when we're in a new year. And again, the return right now, even though it went down, is still much higher than what you would get with a CD or an interest-bearing savings account. As inflation goes down, though, that rate will too, each May and November. Now, this is a 30-year investment, but you can cash it in after just 1 year. If you cash it out before 5 years, the penalty is just that you give up the interest that you would have earned for the most recent 3 months. Again, if you're interested, maybe talk to a financial advisor. I also have more info with today's post at Jason Wheeler TV on Facebook and Twitter, where we keep things right on the money.